control over your money is massively important. Pay attention, be educated, and have control. My money was essentially in a casino for
Yeah.
25 years. Like that's what I learned because I didn't know what the financial advisor's name was, much less where you put all the money, right?
Hello, and welcome to today's episode of Pivot to Profit. I am super excited to have Gary Pinkerton to the show. What's up, Gary?
Hey, Pam, it's awesome to connect. We've been on so many train rides together, like in life through masterminds. It's fun to see your business grow and this new podcast kicking off.
Yeah, awesome, awesome. Let me introduce you to everyone. Gary Pinkerton is a wealth strategist, veteran, best-selling author, business owner, and real estate investor. Passionate about business, reducing taxes, my favorite, and helping clients grow agency, wealth, and family legacy. He's a U.S. Naval Academy graduate where he later taught ethics as a senior professor. He commanded the nuclear attack submarines and was a Pentagon Joint Chiefs Division director. Gary lives in Florida with his family and helps couples cash value life insurance as a family bank with their business and alternative investments. So much fun, Gary.
I made it as hard as I could possibly make it for you. Sorry.
I love it. I love it. So before we dive in, listener, if you're a business owner who wants more clarity and confidence around your finances, you are the reason I started Pivot Business Group. We're a financial strategy firm here to help entrepreneurs just like you understand your numbers, make more profit, reduce your taxes, and grow your wealth. Just go to pamjordan.com to book a call with my team. All right, Gary, are you ready?
I'm ready. I'm ready.
Okay. So obviously, we know each other. We've been in many circles together. So I'm super excited to have you on the podcast just to dig in more to your story and where it started and what you're doing now and how you really are using amazing tools to help people build wealth. So to start with, I know that you grew up in Illinois on a
Hmm.
dairy farm,
I
but what
did.
did you want to be as a kid when you grew up?
A rocket scientist. When I was really young, like in grade school, I would always draw those Saturn V rockets. And so I got fairly close, I guess. I was an underwater rocket driver, a nuclear submarine scientist. So fairly close, but I've always loved technical things. And so I wanted to do that. I have to tell you, though, that by the time the 70s and early 80s happened, we lost our farm. I'm doing odd jobs in high school to put food on the table as a kid. All I wanted was out of Illinois. And my dream went from, sure, rocket scientist would be cool, but safe, secure W-2 job with some certainty would be awesome. And so that's what I chased for a few years.
So, as a kid in that rocky situation of the dairy farm and financial constraints, what did you learn about money? What were you taught as a kid by your parents and that situation that you were in?
Well, my parents would both, if they were alive today, they would tell you that they don't have a clue what happened. They just know that they worked their tail off every day and it ended up imploding. They were very smart people. I would say my dad was very street smart, but he could do the math and, he had really good ideas and had learned from some great people. But he had never, I don't think he finished high school. And so, everything he learned School of Hard Knocks. And it's a good educator, And so he taught me a ton about work ethic. And, but, deep down in my core, I saw the effects of inflation and interest rates, the value of owning real property. I have to tell you, I didn't learn any of those lessons until I was, almost in my 40s. It was until I personally lost half my family's wealth that I started reflecting on, started paying attention to my gut. Before that, I was just chasing my career and climbing the corporate ladder, if you want to call it that, in the military. But it was just an extremely hard, intense job. Every time I would go, to the next milestone of the next level on a submarine or the next military advancement rank,
Yeah.
I made it up to captain. So I went through six of those things in five or six different positions on submarines that you had to qualify for. And each time it was 15, 20% of the people would make it. And so, if you started 300 people, by the time you go through a few of those, like it's really, really competitive. And so I just focused on that. But when I was commanding my submarine in the Pacific Ocean from 2008 to 11, talk about timing. I had
Yeah.
started that with, frankly, I'd worn out my marriage and my kids, and they didn't know their dad, and so it was kind of this polar opposite of what my experience with my father. My father had no money, nothing to give us other than love and time and knowledge, which clearly worked because 20 some years later, my sister and I both have money. We don't have any time around our kids. And so I wanted to swap that. And I had decided, hey, I'm going to just get out of the military once this command tour is done. It'd be right around the 2022 year point, and I could have this small pension. I'm like, if you make it to 30, it's much bigger.
Right.
But I was looking big picture at this point, and I had gone from like a negative $2,000 net worth at the Naval Academy when I had to get a loan to buy my uniforms to go to be accepted, to, like almost a millionaire because my wife and I had saved more than half of what we made every year, like well over 50% a year, and bonuses would come in. But the real thing is that the markets in the 90s just went straight up.
Yeah.
And so I felt like, I'm good. I can use that in the pension and I can go spend time around my boys. So I was going to get out early without trying for Admiral or any of those other things. And what happened was when I finished command, I looked at the stuff in the markets for the first time in 3 years and realized this great recession thing had happened and half the money's gone, like more than half is gone.
Yeah.
And so I felt like I couldn't, I couldn't retire at that point. So 5 more years of commuting, not seeing my kids during the week. Right. And so that really frustrated me and it caused me to dig in. And the things I was doing, I didn't really even understand. I went to a Robert Kiyosaki conference.
Love him.
And I was viciously plowing all that money that was left in the markets into real estate. And I couldn't really understand why, but with some help with some mentors and becoming a financial professional myself, I realized what I actually learned as a kid is to protect your wealth. I mean, when you're living in a society where they print money, where inflation occurs, you have to protect yourself from that. And so I will stand on soapboxes across the US. I have stood on those soapboxes and try to educate people on why having real property or real assets is important in times of inflation. And every community that I know of, every society on the planet is using fiat currency now. So, we're all printing money. It's kind of a race to the bottom. And so if you hold hard assets like gold and silver or real estate, then you can protect your family. Again, you're treading water, right? But these darn, real property assets, people will rent them from you. Governments will lend, banks will lend you money, like 80% of the money. I mean, this is crazy. So it's like putting flippers on and swimming upstream against the current that's taking everybody else down over the waterfall. So that's the biggest thing that I learned. And then what I learned in command and in my first 30 years of my adult life was that control over your money is massively important. Pay attention, be educated, and have control. My money was essentially in a casino for 25 years. Like that's what I learned because I didn't know what the financial advisor's name was, much less where he put all the money, right? And so neither did he. Like he couldn't have told you the name of every company that was in the mutual fund that my money was in. Like that's craziness. So anyway, very long answer.
I love it. I love it. So when you eventually got out of the military,
yeah,
why wealth and financial planning and investment?
Yeah.
Like, how did you stumble on that and be like, this is the answer? This is the next thing for me? Because I talk to a lot of entrepreneurs who essentially exit, and that's what you did. You exited the military, right? And and they struggle to find out what's next. So how did you find out that this is what was next for you?
Yeah. So what I thought was going to be when I was getting out in 2011 ended up being 5 years before I got out, because I was having to rebuild. And so during that period, I was just searching. So I was buying as many rental properties as I could, those turnkey kind of rental properties across the US. And as I was getting ready to do that, I was listening to an advertisement on the Real Estate Guys radio show, and Patrick Donahoe from Paradigm Life, who was my advisor starting back in 2011, taught me about the value of holding liquidity in what we call tier one of our hierarchy of wealth. And so when I go and meet with a client, I kind of map out their assets from the perspective of building, if they were like Egyptians, building this hierarchy of wealth for their family, like a pyramid, an Egyptian pyramid. And the stuff on the bottom is foundational. It's strong, holds everything else upright. And we really stole this from Abraham Maslow in his hierarchy of needs, if anybody's familiar with the whole food, shelter, and clothing conversation. So making sure there's enough in the foundation that the whole thing doesn't fall over. And when I was reflecting back on my own life, I realized that my entire family's net worth was way up at the top, because what determines what tier you're at is how much control you have over your money, which drives how much risk you're taking on. And obviously they're opposites, right? So the foundational layer, if you fall off, it's not very scary, and you're in high control over where that money actually disappears or not. But as you get up higher, my money was maximum risk because I have no control or insight into what's happening. And so I try to help clients build out that way. And that's what Patrick was teaching me. And I realized that I did not have enough liquidity to be able to do what I was doing, which was plowing money into illiquid assets. So even though the markets was really bad to me in the end, and I still have a distaste for people convincing others to put their money in an environment where they have no control, I was trying to do that. And so the things I learned just deeply inspired me. Like it was speaking to my core. And in reflection now, I think a little bit more mature again, 10 years later, I can look back on that and say that the thing that I was most proud of when I was in the military was serving other people and protecting this concept of what our founding fathers put in place almost 250 years ago, which is that we will give you property rights to your stuff if you build it. And so we'll protect those rights. If you build more, if you work harder, your family can benefit from it. And so I was protecting that, out in the oceans and from outside aggressors. And I started to realize that the real problem is on the inside. Like we're going to rip this thing down apart from the inside. And if you have any family who is on the other side of the political aisle from yourself over the last 10 years, you certainly know what I'm talking about, right? Like I'm not saying which one's better on this podcast, at least. I'm just saying like we are pulling this thing apart. And so I wanted to be able to serve people. And what I saw in serving people was if I can teach people to have the confidence for not just real estate, but more importantly, to run their own business. Like if you can get up, turn the little sign from closed to open in the storefront or the virtual storefront, and people like what you do and they pay you for it, your family is safe. You have agency.
Yeah.
If you want to make it bigger, do it. Great. But that's why I did it.
Okay. I love it. And so was there training or certification? Like what was your educational journey going? Because running a nuclear submarine is super impressive, but it's not the same as wealth building. So like,
totally not.
What was that education for you?
So there is education. I'll tell you, a lot of it's optional. I mean, to actually be the core fundamental safe, liquid, guaranteed place that we recommend people, store their cash for emergency funds and business reserves is a whole life insurance policy. So to implement that thing, truly, I just need to be a life insurance agent, which doesn't even require a high school degree. So it's not formal, but there is opportunity if you want to continue to add more value and grow in your industry. So, I mean, I've gone through the entire CFP program at this point. I've done chartered financial consultant and chartered life underwriter, which are the graduate level, I guess you would say, for life insurance. So it is there. I would say that the most valuable training and education I've gotten and that I've spent most time on is just working with calculators with giants in our industry to better understand how to compare and help families make financial choices for their business and for themselves and for their investments. Like things of, does it make sense to save all this money into a college savings plan, or do I save it, in a savings account for my child, or how much liquidity do I need for the business? So that takes more math, and I do enjoy doing that.
Okay. You're a big advocate of using cash flow life insurance.
Yep.
As a family bank.
Yeah.
I love this concept and I do it.
Yeah.
But can you, in simple terms, break it down for our listeners as what we mean by value life insurance and family bank?
So I've been told I'm the king of analogies and the king of oversimplifying to the point of selling people to not bother working with me, because I say things like, in the end, this is a bucket. It's a very safe bucket that you can store the cash in that you want to save for your family. It might be for emergencies, for business reserves, but it might also be for the money you're saving for that next rental property or even the next vacation. So there are places where we save money that we're not going to spend at the end of the month, and some are better than others. And so high yield savings, pretty good start, but then you get taxed and you lose a quarter of it. And then it's also in a place that, there's caps on what they will protect for you. And it doesn't provide value for the number one asset. I have to caution myself and take a deep breath, because I will get on a soapbox about how the human, we who are providing for our families, the business owner, the high earning W-2 employee who's put, if you're a doctor, you put 2 decades worth of work into that asset. And then you get told by some dude on a podcast or a radio show, like, don't insure that thing. Like, to me, that's nuts. So insuring the human, to me, is the most important thing to insure, because there's unlimited value. I mean, any of us could be the next Elon Musk or Colonel Sanders if we're breathing today still. So unlimited potential, yet we don't insure it. And so my passion is to help people understand what their fully insured value looks like personally, and then help them get there if they also agree that they're the most important financial tool that their family has. And if they don't agree, we're probably not a good fit long term anyway, so we're good. And so there's that piece, but then there's whole life insurance that is a bucket that you can store cash in. Now there's IRS limits that we want to stay within. It's not hard to do that. I have over 1,000 clients and they all are staying within those limits. And it's essentially, instead of being like a savings account where you can put anything you want into it, this has like a minimum and a maximum annually. And the minimum is basically 20% of the max. So a family starting out, it could be like, hey, we want to save $10,000 a year or $800 a month. And so it would have a minimum of like 2,000 and a max of 10, or it could be 10 times that or 100 times that. I have people who are putting $1 million a year in, but it's just a different scenario. And so again, it's a bucket. It's much more efficient. It'll grow at roughly today 5%, maybe 5.5% a year net of any taxes and the insurance. So if you want to reproduce this at Chase Bank, you could get their secret high yield savings account that's doing 8%, which doesn't exist. But if you did, then after taxes, you'd have maybe 6% left, and then pay a little bit for the insurance, and you'd be down around that same place. So I talk about this as a banking system coupled with life insurance that's guaranteed and protecting the number one asset.
Okay. I love it. So let's give an example.
Okay.
So someone has a whole life insurance policy that they're
Uh-huh.
putting $10,000 in a year or
Mm-hmm.
more. So that is a whole life policy so that when they die, their family gets the death benefit, which
Yeah, say
is
it's 500 or something. Yeah.
right. $500,000, whatever.
Uh-huh.
But how the family bank comes in is while you're alive, the
Mhm.
premium that you're putting into that policy is cash in the bucket that you're able to access.
Right.
So
Yep.
explain how people do that.
Well, so we go through a process of a few meetings to figure out what your financial picture looks like, how your hierarchy of wealth looks like, that Egyptian pyramid thing. And then, where are the shortfalls? There's basically two paths that everyone we work with have to be on to be successful long term. They're on a protection path, like they're protecting their family from the loss of their really important things, which humans number one, but your car and your house and your business are also pretty important. And so I make sure that they're solid there, that they're not going to go backwards and kind of fall off the financial cliff because of something they weren't looking at. And then we get into the wealth accumulation bucket. And that's simply just, let's take every dollar that comes into your life and let's not waste it. So, work with Pam so that you don't pay it unnecessarily in taxes, that it doesn't get stolen from you. So it's in a good asset protected kind of environment. And then let's just grow it in a place where it can do it efficiently, but still remain fully accessible to you. So again, we size that bucket and then they start contributing. And you can contribute one time a year at the very beginning. You can do it monthly or whatever is a good fit. But let's say that this family, and I'm going to go a little bit bigger numbers so we can go buy a rental house with it or something. So this family decides that, hey, 20K a year minimum savings is awesome because we really want to every year save 100K. In the first year, I meet them and they have 200K sitting in savings and checking, maybe in the business and personally. And so they're like, yeah, it's kind of sitting here and it's doing fine. It's in high yield savings. And when we go look at it, it's like 2.5%. And they're separately doing term insurance or they don't have enough. And we're like, okay, why don't we just position that 100 of it this year, 100, maybe 6 months or a year later for the second policy year. And then now you got 200K sitting in there, let's say, and you want to go buy a rental property and the down payment is 100K maybe, or maybe it's 50K, whatever. But you can borrow against the policy. So the beauty of this is that you can use your policy as collateral, just like you could your primary residence. So what I tell people is if you ever get hung up and somebody is telling you like whole life insurance is a scam or there's no access to the money or whatever, just remember to compare it directly to your primary residence because tax wise, equity wise, building wealth wise for generations in this country and around the world, real property and liquid assets like whole life insurance have been the ways in which people have grown permanent wealth.
Yeah.
And you can borrow against your primary residence. If you have 200K equity in it instead of the policy, you got two choices. Sell your house and move the kids into an apartment or borrow against it in the form of a line of credit or, refinance and pull it out. But you can get access to the equity. And if you do that way, if you get a line of credit against it, then your house continues to go up in value. It continues to provide the shelter that you like. And then let's say 10 years later, you've paid it back and you realize, wow, there's not 200K equity anymore. There's 300K. And so I'm
Right.
really happy I didn't sell it because it continued to go up in the background. And so the same thing with a policy. You've got growth in there that you have never paid tax on, and you can borrow a line of credit against it and go use it. The money, let's say you want to borrow 50K, it shows up in your bank account in 2 days. It's ready to go close, and there's no funding fee. There's really no application. They just ask you how much do you want and where do we send it.
Yeah.
And so it's sitting in your bank account. It's seasoned. It's ready to go in about 2 days. And you then decide how and when you want to pay it back, if ever. Because the same thing with your home. Now, typically a line of credit requires you to pay it back or at least pay the interest monthly. But if we ignore that, it's very similar to your house where if you didn't end up paying it back and you died, then what goes to the family is the value of the house minus the loan you
The
had.
loan.
Same thing with policies.
So this family puts 200,000 in year or 100,000 in year one, 100,000 in year two. They find a rental property. They want a beach house for the family, whatever. So then they can borrow against their cash value life insurance
Mm-hmm.
instead of going and getting a loan. So they can get the $50,000, take that to closing as their down payment.
Yep.
And now they own an asset, a property. But what's magical about this is their life insurance policy, cash value whole policy, is growing like the money were still there.
Because it is still there, right? Just like in your house, it's still
Yeah.
there. Yep, exactly, 100%. And typically I would promote or I'd recommend people do what you said, which is borrow against just for the down payment and go get a normal conventional loan that our government's crazy enough to give us, even at today's rates. I mean, it's crazy. And just use your money, your cash value, as kind of a wild card in your hand so that you can use it when you can't get another loan that is as good as that one.
Yeah. I love it. And so then what's powerful about this is the growth of that policy, the interest that it earns, the 5 points, 5.5 points, whatever, that's tax-free money.
Yep.
Because the money that you put in for the premium is after tax money. So similar to a Roth, it grows tax free. And so
Perfect.
this is a great way to pass wealth on to the next generation because you put in $100,000 a year for the next 10 years. All of a sudden, upon time of death, with the magic of compound interest, you have a large amount of money sitting there that goes to your beneficiaries, your family, tax free.
Yep. 100%. Yep. And you can do more things with Family Bank as you get more and more advanced. You can operate the whole thing like the Rockefellers did inside a family trust that will last for generations. And when a policy pays out after you've used it throughout your lifetime for whatever, then it dumps in as cash, and you can use it to go get policies on future generations and kind of perpetuate the concept.
Yeah, I love it. I love it. So when you talk to business owners, how are they using the money? We've mentioned real estate, and I know that's something that you're passionate about. How else are they leveraging the cash value life insurance to
Yeah.
benefit their families?
Probably the most common and the perfect way to do it is to create one that, again, buckets one or two or however many you want for the family that will combined. They will collect the amount of money that you kind of have sitting around now in savings and checking in places where it's less liquid or less efficient, and the ongoing kind of cash flow that you intend to take out of the business for the next few years. So it will absorb that. And that's really family money. That's, real estate, vacations, kids' college, emergency fund for the family. And then separately for the business, there's a whole host of things that this industry has created over the years to support business owners, big business and small. And so what I tell them is, like, in some manner, we'll figure out exactly which of those tools to use. But the big picture, what we're trying to do is that if you have money that is your business's emergency fund, or your business money you're saving up to make the investment, meaning to get more inventory, or we work with salon owners, right?
Yeah.
And so they're, if they want to start a hair extension business, they need a bunch of capital, and then every few months when they're refilling, they need that capital again, right? And so the money sits around for long periods of time and then needs to be used. And so having an emergency fund for the business, whether it's payroll or just inventory, finding a reason for the business to own one of these family banks, if you will, or one of these policies on either the owners or their key employees. I mean, there's a dozen reasons how you could do it. So it's very flexible, but that's really how they do it. They do it in their personal life, and then if appropriate, they do it in the business.
I love it. I love it. What mistakes do you see families making when trying to build generational wealth?
Number one is insufficient liquidity. Not, it's getting, I'll call it greedy, but it's really just impatient. You'll hear people say, hey, cash is trash. Don't have money sitting around. You're losing out against inflation. And numerically, that's probably accurate in most cases. I mean, if you can put it into a policy and grow it at 5 to 5.25% net of tax right now, that probably is barely exceeding inflation, but it's not impressive, right? And so if you get the idea that I should have it in, I don't know, Bitcoin or plow it back into more hair extensions for my business, well, that probably will earn you more money when the sun is shining. The thing that it takes forever to get comfortable with is having liquidity sitting on the sideline that's not out there working for you.
Yeah.
And we all somehow learn that lesson, I think, over time. It comes from having to sell your business or your real estate at a fire sale. It comes from sleepless nights. Real quick story for me. I've had this happen to me twice now. I'm in 2020. I had 35 or so doors, and all these renters and tenants in 5 different states. And the mayor in every state that I own property in stood in front of the camera and said, we know you're hurting. You don't need to pay your rent until further notice. And my wife's like, well, what does that mean, further notice? Like, how long does that last for us?
Yeah,
Because they
that's
didn't say
scary.
that to the landlord who had a mortgage, right? And so as I went and did the math, I had just sent my money. I just sent $500,000, a big, big investment for us, over to a rental property to be a passive investment in somebody else's deal.
Yeah.
And even though I was teaching this stuff, I had not personally embodied it to the point where I had 30 to 40% of my net worth liquid. Like a lot of hopefully no one drove off the road when they're listening to this in the car. Like, this guy's an idiot, 30 to 40%. So it's just really hard to do that in our mindset and our society here, because we're just thinking I could grow that in Bitcoin or whatever, right? And so I did that, and I went and did the math, and I was like less than 6 months that I had available. I felt like an idiot, especially since I teach this all the time.
Right.
And, amazing thing, God said, okay, you've learned your lesson. And so I hear from, just a couple days later from the guy who was doing the syndication. He's like, hey, the banks won't close on these loans. We have to give it back to you. We're out of contract on the deal. And the 500K shows back up in my bank account. And then
Praise.
when I went and did the math, I could say, hey, we're good. We can go a couple of years like this, and no crisis lasts 2 years like that. I mean, not even the Great Depression. I mean, it was that long, but not for one individual and one challenge. And so I now maintain that. And there was another example more recently where I had a bunch of money in that tier 3 of the hierarchy, kind of up higher, where I've lent money out to other people. And for a host of reasons, the person was a crook, or the person was an idiot, or it just didn't go well with raising interest rates or something. They lost the asset that I'd invested in, or they needed a capital call, extra money from me, or the person just ran off with it. But that was a huge portion of my net worth. I mean, I still had the liquidity, but that's my whole point, is that I hated that. I was frustrated, but I got through those stages of grieving really quickly, where I saw a lot of other people actually lost the most important thing, which was their own mindset and their own business, because they were caught up in, oh my gosh, I've let my family down, and they're in depression, and they're like, we may lose our primary residence, right? Like, they were
Scary.
really digging deep. And
Yeah.
I was like, well, that sucks. But I could pay off all those challenges with the liquidity that Patrick finally convinced me that I need to hold, and that COVID taught me.
Yeah. That you need to have that cash available.
Yeah.
And
And so the number one thing for business owners is just have enough liquidity so that your mind can always be optimistic. You can always be looking for the next deal. And that way, not just investment, but like for your business.
yeah. And in your perspective, part of that liquidity can be in one of these cash value life insurance policies, because it's protected, it grows tax free. And if you need it, you can borrow against it.
Yeah, I would say most of it should be there. I mean, because you can move it within a day or two into your savings and checking. And the other key thing is that like I said, it's tough to get comfortable having that much liquidity sitting around until it's happened to you. Like, once it's happened to you, you're like, yeah, I'm not touching that hot stove anymore.
Right.
Um, right. But along the way, one of the things that I've seen help my clients get there, and so that they don't have to touch the stove themselves, is that, I remind them, and they remind themselves, my gosh, this is like 8% in a bank. And so if somebody's saying, hey, I'll give you 12% if you lend me the money, I think I'll be all right and be able to return it to you. You're like, nah, I'm good. I'm making 8, like the equivalent of 8.
Yeah.
So it makes you keep your money back in a safe environment and allow it to sit there liquid without you freaking out and like second guessing yourself all the time.
Yeah. Yeah. I love it. I love it. Yeah, this is a powerful tool, and it's something that people don't fully understand. And I find when it comes to money, people have shame and lots of emotion, money trauma. And so they
Yeah.
don't understand it. And so it's complicated. So they just don't do it because they're hesitant to jump in. Um, so, what is some advice that you would give to someone who's new to hearing about this? Are there books they should read? Is there like, where can they go to learn more, to educate themselves so they feel empowered to have conversations with you to set up these kind of amazing tools?
Yeah, awesome. So there's a lot of stuff on TikTok and YouTube. I would actually steer them away from that. Um, there are some really great books out there from some wonderful people. In fact, anybody who reaches out to me at the contact information you're going to put in there, I will send them a book called Heads I Win, Tails You Lose, which Patrick Donahoe, my mentor from back in 2011, and the guy that I still partner with in his business, wrote a really good book that's an alternative look at what you think you know about growing wealth, and about finance and the markets and things. And so it's just a different look at it that resonates with most people I show the book to. It's got that hierarchy of wealth thing in it. It's got family banking in it. I run a podcast that this will play on, and so it's called Gary's Gulch. It's a hat tip to Ayn Rand and the book that she wrote, Atlas Shrugged, that was all about helping people gain agency in their lives. And so I talk a lot about business owners, investors, and this concept as well, but basic money kind of concepts and tax and things. And then, some of the good books out there other than ours, Heads I Win, that I'd be happy to give you ebook, audio, paper, whatever. There's a great author, Kim Butler. She's written a bunch of small digestible books, busting the interest rate lies, busting the life insurance lies. Just kind of has that kind of theme.
Yeah.
And they're small, they're easy to read, easily accessible. Where you get books.
I love it. So, Gary, what is next for you? What's on the horizon? What are you focusing
Yeah,
on?
super excited about this. There was a period, I'll go back and say what I thought was going to be. I got really excited a couple years ago with franchises. I looked into several franchises, almost pulled the trigger on a couple of them. Did not for a host of reasons, but I really think it was God's hand on me saying, nope, that's not quite it, but keep
Not it.
looking. It's not quite it yet. And so I do like that idea. And the reason is because it teaches people systems. I mean, every Chick-fil-A out there is successful. I've never seen a shut down Chick-fil-A. And there's a line of people who want to get into it, and people will pay $250,000 to get a franchise, right? Why? Because it's about the systems and the culture. And if you didn't grow up in the military or have have parents who specifically taught you that kind of thing, then you don't necessarily understand systems and processes and the point of it. I mean, you teach your clients that there's good books out there, but typically people are touching the hot stove to figure out they need that kind of advice. And so I had that though. And so I didn't need a franchise to do it. But what advice I would give to a lot of people is like, if you want to run your own business, but have no idea what you're going to do yet, go work in a couple businesses, figure out one that works for you, and then buy a franchise, a small franchise in that place, because it comes with marketing. It comes with, all that
It's a business
stuff.
in a box.
Yeah, right. And in long term, it's not going to be a thing. Okay, so that's what I thought was going to be it.
Okay.
What it's actually going to be is me spending a decade here helping my 2 young sons and maybe other kids. Maybe I'll put a system together on how to get going on your own business, but start something from the ground up and put those systems and processes in place. I mean, if I'm mid 60s looking back on my 2 sons and their young families being successful, running their own lives with agency, I mean, that's a win.
I love it. I love it. All right. So we're going to wrap up here, Gary, with some rapid response questions. So just answer, whatever it is, no explanation. Are you ready?
I'm ready.
Profit or growth?
Growth.
What's one business expense you'll never cut no matter what?
Investment in self.
What's the best money advice you've ever received?
Remain liquid because it's fuel for the racehorse and you're the racehorse. Keep your mindset.
All right. If you had to start over today, what's the first thing you do differently with your finances?
It's a broken record. I would remain more liquid and focus on the financial books first.
Okay. And what does financial freedom mean to Gary?
Agency. It means agency. It means the ability to live life on my terms, meaning in a place that I want to live politically, or what the horizon looks like. I'm not supposed to explain. Live life on your own terms, agency.
I love it. I love it. Gary, this has been amazing. Thank you so much for sharing your profit story with us. Where can our audience connect with you?
So I try to make it simple. It sounds a little neurotic, but Gary at GaryPinkerton.com. And please check out my podcast, Gary's Gulch.
I love it. I love it. Gary, thank you so much for educating us on this amazing wealth building tool. That is all for today's episode of Pivot to Profit. If you need help understanding your numbers, taking the money from your company and want to grow wealth, we work with Gary with a number of our clients. Just go to PamJordan.com. We would love to talk to you and help you do that. And remember, it is not what you make that matters, it's what you keep.